Welcome back. In this video, we will set up the strategies in MT5. Before we start, it's essential to know that moving averages and Bollinger Bands will appear differently depending on the chart timeframe you use. This happens because these indicators are calculated using data from each specific timeframe. Longer timeframes aggregate data from shorter periods, which smooths out short-term price fluctuations and highlights larger trends. On the other hand, shorter timeframes are more sensitive to price changes, showing more immediate and sometimes more volatile price movements. These differences can significantly impact trading decisions as each timeframe provides a unique perspective on price action and trends. Choose a timeframe that best fits your trading style and preferences. Now, let's start with executing the 520 moving averages crossover strategy. The first step is to set up the indicators. Open your MT5 platform and load the chart for the Volatility 50 index. Here, I'm using the web platform. Click on the Add Indicator icon in the toolbar, select Trend, and then Moving Average. Set up two moving averages with the following parameters. First MA, period, 5, method, simple, apply to, close. Then repeat for the second MA, period, 20, method, simple, apply to, close. Remember guys, a buy signal occurs when the 5-day SMA crosses above the 20-day SMA, indicating a potential upward price movement as the index reverts to its mean. Conversely, a sell signal happens when the 5-day SMA crosses below the 20-day SMA, suggesting a potential downward price movement indicating a return to the mean. Now it is time to execute the strategy. For a short position, wait for the 5-day SMA to cross below the 20-day SMA. In this example, it's around $274. Enter the trade and set the stop loss just above the 20 SMA, for instance, around $275. Take profit when the 5-day SMA crosses back above the 20-day SMA around $270. Conversely, to enter a long position, wait for the 5-day SMA to cross above the 20-day SMA. Enter the trade and set the stop loss just below the 20 SMA, depending on your preferences. Take profit when the 5-day SMA crosses back below the 20-day SMA. Monitor the price movements and adjust your stop loss and take profit orders accordingly. Next, let's look at implementing the Bollinger Bands strategy. Open a fresh chart of the Volatility 50 index or clear your current indicators. Click on the Indicators icon, select Trend, and then Bollinger Bands. Set the Bollinger Bands parameters as follows. Period 20, deviations 2, shift 0, apply to, close, color, choose a distinct color for the bands. You can adjust these to suit your personal trading preferences. Now, identify periods where the Bollinger Bands contract or squeeze significantly. This indicates low volatility and the potential for a breakout. Let's look at the Volatility 50 index and revise the two potential scenarios. Scenario 1. Band squeeze and price is touching the lower band. If the current price is around $282 near the level of the lower band, you could enter a long position. Depending on your risk tolerance, set the take profit at the 20-day SMA, say $283.5 or the upper band, say $285. Set the stop loss just below the lower band, say $281. Conversely, Scenario 2 presents a situation where the price touches the upper band. You can enter a short position if the bands are squeezing and the current price is near the upper band. Set the take profit at the 20-day SMA or the lower band, depending on your risk tolerance. Set the stop loss just above the upper band. Once you open the position, Monitor the price movements and adjust your stop loss and take profit orders accordingly. As we conclude this video, we emphasize the importance of practice and precision in your trading approach. We strongly recommend utilizing a demo account to refine your strategies before engaging in live trading. Remember to factor in spreads and associated trading costs, as these elements can significantly impact your potential returns or losses. While manual trading offers direct control, it requires substantial focus and time commitment. Within the MT5 desktop terminal, consider implementing alerts on these indicators or exploring automating these strategies through an expert advisor to enhance efficiency and maintain consistency. These tools can help standardize your trading process and potentially reduce human error. If you're interested in exploring these tools further, our Deriv Academy MT5 courses provide detailed and comprehensive guidance. In our upcoming videos, we will study advanced risk management strategies, equipping you with the additional tools to navigate the volatility indices. Happy trading!